Hey everybody, so we can see that the S&P is breaking out, closing at new highs. We have a lot to go over in a short time to do it because there's a bunch of conference calls I have to listen to. Make sure you listen to the pre-market tomorrow, the public one, because we're going to go over those calls, but I really need to be on them, especially the CVNA one that is actually taking place right now. But I really want you to watch this on what's going on with smart money and dumb money. It's very, very important. Now, before we get into smart money, dumb money, and the spreads, I think it's really important to do a couple things here. Number one, fear and greed. If you think that we are over one way or another, we are just not. What we are seeing is we are seeing that rotation that we talked about yesterday and in Saturday's video. While most say that we're not going anywhere, yes and no. What we have here is we have no fear, none. And we have no greed, none. And you're going to see this when we get to smart money, dumb money. It's pretty obvious. But you're in this neutral stance right now. Now, the important thing about this is how do you profit from it? You have to watch the rotation. They're rotating out of certain names. They're buying certain names and they're selling others. And they're doing it over and over again. And they're being vicious with it. We're going to get into a couple names that really point that out. So let's take a look at this and let's move forward. But just understand where we are. Also, just to take the timeline for a second and look at the timeline that we just showed you in the overview form of fear and greed, you can actually click on that button on the website and it'll actually give you a timeline. I like looking at the timeline and saying, okay, what period in time were we neutral, and then how did the market respond to that? For example, you could say right here that we've been pretty neutral for a while. So then you might look and say, okay, well, where else were we like neutral for a while? You were a little bit in here, but you're really stagnant in here more than anything else, aren't you? So then you can kind of go to these spots and see how you acted on the market. And it's pretty obvious how we acted from there. You tend to just kind of grind higher, and that's really what happened. As a matter of fact, if you took this whole area, which is very similar here, and you're basically taking that low and you'll take this low, and you come across, what you'll note about this whole area, coming all the way over here actually, is this was July 18th, 17th right here. And that's actually where we got to that point where the market collapsed on that CPI number, negative CPI. You might remember that month over month CPI. Before that, you were just grinding along very similar to here. So neutral is where we're at. Not fear, not greed, just is. And it's leading to rotation. And by rotation, I should also use the word frustration. They're pretty much, you can do them the same way. People are watching the markets go sideways to up a little bit or down a little bit. And at the same time, they're watching their name go sideways or all of a sudden just have this huge drop. Or the one that they're not in, they're watching just rocket. That's what happens when you rotate and you have a market like this. This is why chasing alpha is going to be so important and understanding where the money's going. And understand that when it moves, you have to get out of it. We're going to go through a couple names today, but if you look at the diary for a second, and anyone can look this up, just go NYSE diary and you'll find this data. You can see what's going on here, the issues that are traded, where you were a week ago, and you're going to note something here. It's not that there's a problem with the breadth. If you look at the advanced declines, which is right here, and you look at the day before, you're 1-to-1 advanced decline, just where you were last week. Nothing's changing there. If you look at the new highs, you had 115 new highs today, 52 new lows. Look where you were yesterday, 114 new highs, 39 new lows. Look where you were last week. So you would actually say that it's getting better. And why this number keeps going up and was up yesterday, it's a horrible drawing, is exactly what we're just talking about. It's that rotation. We're going into software. We're coming out of these semis. We're going into certain semiconductors, and we're coming out of the AI semiconductors. And you could see that today with names like Lam Research and some of these other names that happened today, like ADI just kept going up. So we're going to get to some of these names in a moment. But understand that that's what's happening, rotation. And that's going to be really obvious when we now do smart money, dumb money. But I want to preface why that's happening. Now, in front of us is smart money, dumb money. And if you've been watching this channel for some time, we don't refer to this as smart and we don't refer to this as dumb. We refer to this as institutions because that's how it's calculated. And we refer to this as retail because that's how that is calculated. And why does that matter? It matters when you understand what we're saying here. For those that are newer to this, it's a great tool. It just tells you sentiment-wise where people are. And then the disparity between the two lines, there's different ways to use it once you understand where it is. One thing to take away, and we're going to go through in a moment here, understand retail moves fast, and then you have institutions which move somewhat slow. So even if they're going up, they're doing it at a snail's pace, just like retail just can't wait to get out. Institutions are like, we better start selling some. right? That's how they move. This is how we see retail move. What we're seeing here is pretty classic textbook stuff. So we're seeing them bottom out here on the institutional side, and then we saw retail top out, and then retail starts to panic sell, and institutions will slowly buy into that. That's why it's so important to understand the trajectory. When I'm saying that one will lift higher, and then the other one may get to the same spot, right? But it's going to take longer to get there. And that longer one is going to be the institutions. So when we see that spike right here at that particular level, we can just see it right here, and then we see where we're at right now, it's really important to get that. Why? Because, well, that tells you why you just hit a high. Because retail stopped buying and panicked, and institutions at the same time just said, oh, we're going to buy, but we're going to take our sweet time. You can see this clearer on a one-year chart. Now, when you zoom in on this, you can't help but say it, but you can see our level right here and how that ties perfectly with that high, right? And then you can see that where the institutions are like, yeah, we're going to buy, but we're going to take our time. We're not in any hurry. And then they got a little excited there, and then they went sideways. But at the same time, what are we doing here on the retail side? Well, we're just kind of hanging out. We didn't go over our net buy area yet where we were just buying. And institutions haven't either, but what are neither doing now? And this, again, is, in my opinion, very important. Neither one of them is selling anymore. Well, if neither one of them is selling, how in the world does the market go down? Well, very clearly it doesn't. And this is Sediment Trader. This is not me. But what you're seeing is rotation. We're going to get to the breadth again. We went over it yesterday, but we really got to hammer this point home to people because a lot of people are not getting this. The rotation's real, guys, and from someone who's been trading for 25 years, it reminds me a lot of 95, 96. Now, what we're going to see here, again, when we zoom in on this, is that we are just having those levels. All right, so how does this equate, and why do you care about us flatlining? I'll show you. What we have in front of us is smart money, dumb money, and why is this important? Smart money, dumb money confidence spread is very important because it tells us the relationship between the two. And that relationship is something that we really need to pay attention to. Why? Not so much for getting over the zero line, there is something about that, but it's really smart money divided by dumb money, meaning institutions divided by retail. And remember earlier when we were talking about this, what we said about it and why it was so important? Because this is institutions divided by retail. It's not smart divided by dumb. It's institution momentum divided by retail momentum. If you think about it that way, when you're going higher, you could see why the market would sell down. If you're going lower, right, and you peaked, you could see why that peak is going to mark off bottoms. This just makes perfect sense when you say it that way. If you think about it and what these things are, institutions versus retail. If you think about the fact that smart money or institutions catches up and is out buying retail, then it makes sense that you're going to put in a bottom, or as my niece says, bottoms. So when you start to see this, you get it. Now, where you are in the chart can determine how long this goes on for, but also you're going to get these mini moves after a major move. And these mini moves can keep that going for some time, as this happened right in here. And what we're starting to see here was we had this bottom that was putting in here, lifting, and usually that leads to a top, which led to a small mini top. Now we're flipping in here. Let's do this on a one. Once we zoom in on this and you get it, you'll start seeing, going, oh, that does make sense. And you can just think about it. If institutions start out buying what retail is selling, then what are we going to do? Well, we're just going to go higher. So it's so important to understand how this stuff is done and why it's so significant. And it doesn't matter. It does matter where we are, right? It does matter where we are, because if you're up higher and you're dropping lower, then of course it's going to matter. But if you're going to just grind, then you're just going to grind. And so it is what it is. So in other words, you don't want to say, oh, this one's insignificant because it's not up here. No, you just say, okay, well, we're doing the same thing, but there's not as much leeway. So maybe we're going to break, and then maybe we're going to rally back up, or maybe we're going to go sideways for a while. Here they went sideways for a while, and we just ground through November, December, and then you can see where the peak is and what happens there, and then it falls in upon itself. You get a bottom in the chart, right? And then you can kind of go from there. All right. See where we're going with this? Understand how this is going? All right, so what I'm saying here is this starts to roll and peak, it means institutions are catching up to retail. Take a look again. So when you go back and we look at it this way before we go to the next topic, this is what you're seeing, and this is why it's so important. Institutions have caught up to retail. Now, if retail starts dumping, you have a different story, and the graph might look different. But for right now, you're aligned, and you're seeing that very clearly. What you're having here is a case of massive rotation because of not only what's going on in technology, but the White House. But if you take a look at some of the technology stuff and the way it's moving, it explains like why Meta got slammed today. I'll give you an example. I've been through what I would say are about 3 of these and something 20 plus years of doing it where you've seen the new technologies come out and change. And so with Grok 3, Monday, Elon Musk states that this family, Grok 3, boasts 10 times more trading than Grok 2, made possible by AI's creation of its own Memphis, Tennessee data center, home to 200,000 GPUs. So much for 4 GPUs and 2 hamsters at DeepSeek, as we were told. Now, if you start looking at this, this is where it got super interesting. If you start looking at this data, and just to highlight where Grok 3 is, in regards to this, I got this from Newsweek. Newsweek got it from X, just so you understand where the data is coming from and understand that. It's really important to understand where the data comes at all times when you're looking at data. There's no really other way to say it. You always want to say it. But on math, science, and coding, Grok 3 and Grok 3 Mini now claim to be above everybody else. Whether they are or they're not, or they're above DeepSeek super duper level or whatever, I don't really care, guys. You don't have to drop that in the comments. The bottom line is this company just started and it's already outpacing in certain ways. That's what you should be taking from this. Not this little version that this guy keeps in his back pocket's better than this little version. I know everyone's going to go into that. That's completely irrelevant. What's relevant is he just started. This is where he's at. So you can talk about the nuance of this, just like you could talk about it with DeepSeek. But what you should be taking from this, and even the second graph over here, reasoning and testing compute time, what you should be taking from this more than anything is not the nuance of where we are versus DeepSeek R1 or where Gemini is, but the rate of change in which this is happening. And it is that rate of change that is going to make people a lot of money if they know what to do with it, because you're going to ebb and flow. A great example of this is Meta. Meta was the company that everybody looked at and loved. And then the problem with Meta became that DeepSeek was going to be a problem. And then everybody gaps down. Then they start realizing, wait, DeepSeek is linked to Meta, and that's how they trained it, because it's open source and this is better. And I did a whole private video that I linked on Saturday's video, if you watch this, on why Microsoft got hammered and why Meta went up. And it was a 22% move. This is the kind of stuff you can make a lot of money from off of trading. It's not just the technicals, it's the fundamentals. If you get into it, this is really where the stool matters. And I can't stress that enough for you, like how important that is. Once you get that, it's on. Now, where am I going with this? Understanding that these nuances, everybody here loved Meta, except a couple people that were in the know. And it was very clear, very, very clear on Friday at 3:50 that somebody was in the know that this was coming, because they couldn't get out of Meta fast enough. They literally could not get out fast enough at the end of the day. And then you come into Tuesday and they can't get out fast enough because of Grok 3 is killing DeepSeek, therefore it's killing Llama. Therefore, this is the new cat's pajamas. Okay, so what you're going to go through here is derivations of this, where Llama 6 is going to do this, and then this one's going to do that. And meanwhile, they're going to be puking these names out, people saying this is going to be the one, that's going to be the one, and having a basic understanding of this stuff and how it works is going to make a huge difference in your trading. It's no different than when you looked at NVIDIA and understood that AMD could not compete. It's no different than understanding that AMD was out, NVIDIA was in. You could see it in the earnings, how these earnings couldn't play out. Once you get this concept, it makes a lot of sense. It also explains when you look at something like why is AVGO staying up here versus something like a NVIDIA. And NVIDIA has actually come back since then because you're going to need it for the computing power, but people are starting to realize that you're going to need AVGO at more of a rapid pace. So when you start putting those pieces together, it starts making sense. But then you start running into these other things like ARM, for example, which it broke out because they were going to merge and have this huge deal, not merge, but they were going to have this huge deal with Meta and Meta's new chip, and they were doing things with Amazon. But if Meta drops out, then maybe they don't do the interconnectivity the same way they were talking about. So then they dump ARM. See, all these things are connected, and you have to start linking these. We're going to do more and more of this on the video, but I'm going to link Saturday's video at the end of this. And I would strongly suggest that if you haven't, watch the video at the end of Saturday's video. It's a private video on Meta and Microsoft. You're going to want to watch this because it's this rotation that's going to make you understand why this stuff is playing out and why it's trading the way it is. And that's really it.